What's going on, everybody? This is Joe back with our second video in the Strat series, and today we're going to be going over the basic Strat reversal patterns that we see all over the market every day. Last time we talked about the fact that a Japanese candlestick chart can only ever move in three directions: an inside bar, a 1, directional bar, a 2, or an outside bar. Takes up both sides of the range, a 3. Knowing that a Japanese candlestick chart can only ever move in these three directions, we know for a fact that there's only a handful of reversal combinations and continuation combinations that we could see on every single time frame. So today we're just going to be going over a few of those and really how we enter and target each of these reversals, just in the most basic sense. So to start, we have our classic 2-1-2 reversal. This could be either bearish or bullish, as you can see in this example here. 2 up, bullish, inside bar consolidation, 2 down, boom, triggering after we break the inside bar low, targeting the previous candle's pivot. It's the same exact thing for the bullish way. Everything is just in reverse. 2 down, inside bar consolidation, break of the high, move to the previous candle's highest pivot. Next, we see the 2-2 bearish and bullish reversals. Again, we see these all the time. 2 up directional candle, fails, goes 2 down, breaks the previous candle's low. Same thing here. It's 2 down candle, price moves down. We break the previous high of that 2 down candle. 2-2 reversal, entry, target, boom. Next we have our infamous 3-2-2 reversal. Outside bar, comes from the low, takes out these guys, finishes at the high. Takes the high of the 3 bar, but we fail. And then once we take that 2 back down, we get in, targeting these guys. Again, same exact thing, just in reverse. We start high to low, create an outside bar. We push down below the 3 bar, fail, close, take out the high of the 3-2, and then boom, continue back the other way. 3-2-2 reversal. Now, this is one of my personal favorites, and one you'll see work all the time, including the Rev Strat. The 3-1-2 barrel bullish and bearish reversals. So similar to the 3-2-2, we got our 3 bar expansion, take out both sides of the range, but it's followed by consolidation. Everyone's trapped inside that 3 bar. And then once we break the inside of that 1 bar, boom, explosive move to the other way. The 3-1-2, see you later. It happens in both directions, of course. Everything here is a mirror image of each other. We start at the high. Start at the high, finish at the low, take these guys out, inside bar consolidation, break the high of the inside bar, boom, rocket the other way. The 3-1-2, see you later. One of my favorite strat setups. Also, another one of my favorite strat setups, one you'll see work all the time and has people trapped, is the 1-2-2 bearish and bullish Rev Strat. And it always follows the same exact combination. We trade inside of the previous candle's range, starting as a 2-1-2, either a 2-1-2 or a 3-1-2 continuation or reversal. So we consolidate in the middle. We expand out one way, but it's a fake move, and they trap everybody to the high or the low. And boom, back through the range. So as you can see, it's broad information in itself. We took out these guys, and we took out these guys. Again, same thing, just in reverse. Consolidate, expand, trap, trigger, take them all out the other way. It's why the rev strat is such a powerful signal and why it works all the time, because you have traders trapped both sides. And this in itself is outside of this entire range. So this is an outside bar in itself, just in a compound way. And you can see, trap these guys, boom, take them out up here. 1, 2, 2. Beautiful setup on every single time frame, and one I would always recommend looking for. Well, next we have our continuations. So we know, price can only ever reverse or continue, and these aren't necessarily actionable. I mean, you can use it inside bars, of course, as actionable signals. They always are actionable, but 2-1-2 continuations and 2-2 continuations tend to get negated a lot more often, and the 2-1-2 continuation often turns into a rev strat. But you can definitely use them as an entry or add, especially if you have like a bigger time frame liquidity target you're aiming at, or something that just makes sense in the context of the higher time frames. But I wouldn't suggest taking them as an actionable signal, but it's important to know what they are. So we have the 2-1-2 bearish and bullish continuations. Obviously, it's, you're in a bearish trend. You get a 2 down candle, followed by an inside bar, followed by another 2 down. It's the same concept as a 2-1-2 reversal, except, you're not necessarily trading against people that are losing. You're just continuing the trend. Again, same thing for the bullish side. 2 up, they consolidate, figure out what they're going to do, and then boom, decide to go 2 up again. Simple stuff. And we see this all the time as well. Of course, there's the 2-2 continuations. These are not actionable, but they are directional candles. So, if you're in a bearish position, you're in a short, yeah, this is exactly what you want to see. 2, see, in your favor. 2 in your favor. 2 in your favor. We're still good. Same thing with bullish. 2 in our favor. 2 in our favor. Still headed to a bigger target. We're still good on the smaller time frames. I mean, of course, it works on every single time frame, but this is just, it's not necessarily actionable, but this is just the way price moves. Now, the 3-2 reversals, I mean, you can look in these for yourself, and you can trade them, but I wouldn't really recommend it, as they more than often get caught going 3-2 and then fail and become a 3-2-2 reversal. Again, you can sometimes take some scalp moves off of these types of setups, but I wouldn't really recommend taking a 3-2 reversal really on any time frame. Or it's the same as continuations. They don't work or they get negated, but it's just important to know, that it's a part of price action, and you'll see these all the time. The 3-2-2. A lot of times you'll get a 3-2-2 continuation, or you'll get a 3-2-2 reversal. But again, a lot of times when you see a 3-2, you'll see that it'll go 3-2 and often reverse. So I would just keep that in mind and know what they are, but I wouldn't necessarily trade just a 3-2. And next, this is the same exact thing as this rev strat. See, look at this. You take out the high, boom, come all the way back, take out the low. Both sides of this candle right here. See, that's the same exact thing as right here up in this rev strat. You take out the high, boom, take out the low. This trades outside all of this. This is just a compound outside bar. But this is a 1 bar rev strat. So the trade just happens in 1 bar. You see this all the time, and a lot of times it'll come from a 1, like a 1-2 up that goes 3, or 2 down that goes 3. That has like a 1-3 reversal, but it really could happen on a 2, or it could even happen on another 3 bar when you have the right volatility. They happen on all time frames, and you'll see we can identify that by, we take out one side of the range, right? One side of the candle's range, we push above it. Well, if we fall back below that range, we got problems. And we know that generally Once we come below 50% of that previous candle's range, we're more than likely going to continue down and take out the low, creating our outside bar. And you can see that again right here. We go directional candle 2 down. We fail. Once we come through 50% of the previous candle's bar, we can anticipate that we're more than likely, boom, going to come and take out the other side. Now, it's extremely helpful to know that, especially if you're on the wrong side. It'll give you a very good and valid reason to exit your trade, but it'll also, if you start to realize and look hard enough, you can see the stuff forming in real time, and you can actually trade it, especially on the higher time frames. Like say this is an hour, or a bigger time frame. But even a daily chart is when you can really see it. Say if this is an inside day, we trigger up. Well, we know where that trigger is. I mean, that's it's not biased. It's this is the trigger. If we're going to continue higher, we have to be above this trigger. So we have a significant edge when we come back below this trigger and start failing. We can see that, and after we see that failure, we can anticipate the other side of the range is going to get taken out. And this happens on every single time frame. You'll see it on the daily, weekly, hourly, monthly, yearly, quarterly, the minutes, the seconds. It happens on every time frame. And now, just some examples of generally how the market moves and the type of trades we really want to be in. So, as we know, the Strat works on any time frame, any asset. I mean, price action is price action. It doesn't change. The candles have to move like this. And on the way to wherever they're going to go, they always triangle the out. And you'll see this in the charts. Take out the high, come back, take these guys out, triangle the out, and then boom. Continue on. Now, this is where the majority of people get caught. They're buying the breakout. And really, with everything we know, especially with market structure, we want to be buying the triangle out so we can get involved with the boom. We don't want to be buying up here, because buying right here just frustrates us. It immediately puts us into a loser. And then by the time you get down here, you boom, your stops ran, you're frustrated, you don't understand why it didn't work. You thought it was going, and then it goes boom without you. You just always remember that and keep that in your head. Triangle the out, then boom. Am I about to get triangled the out, or am I about to get the boom? We don't want to be a part of the triangle. We want to be a part of the boom on any time frame, whether it's going up or it's going down. Just remember, triangle out, it's just simply corrective activity. It's broad information on a bigger time frame. So, like you can see here, broad information. Triangle the out, and then boom. Exactly what we want to see. Another way that we can be a part of the boom, and helps us stay in smoother trades, is being on the right side of time frame continuity. So if, as we can see here, hour, day, week, month, quarter, year, everything's green. So it's going to be a lot easier to be a buyer there. And the same thing, if these were all red, it would be a lot easier to be a seller. Now, as day traders, we don't necessarily look at the higher time frames continuity as it's very important to know, but from a day-to-day decision, the monthly being green or red might not exactly matter for a 5-minute trade, but it's very important to understand what the weekly, daily, hourly, and even the 15-minute, what they're all doing. Because if everything's red, why are we going to be trying to take a long? If everything's green, why are we going to be trying to take a short? It just doesn't really logically make sense, and it's going to lead to a higher probability of losing. And so we really want to be trading in, of course, the direction of the most twos and the most twos going three. We want to be trading in the direction of the most market participants. If everyone's buying, why are we going to sell? And if everyone's selling, why are we going to buy? It just doesn't make sense. Knowing that little bit of information will help us stay on the right side of the market daily. And you'll notice that when everything the same thing every single time frame. You have continuity on your side. Your trades are so much easier and they work a lot smoother. You see a lot less chop, and it's just simply the trades you want to be in. Another setup you'll often see in the charts is what we like to refer to as a pivot machine gun. So this is when typically you'll get 5 pivots in a row. 5. And we know that these are obvious stop points. This is where traders obviously put their stops. So when we take these guys out and something start coming back through the range, we know that everybody that got long all through this area, once price starts coming back through, they're all going to have to sell to cover, causing a huge squeeze of all these trader stops, giving us this huge move. And you'll also see it to the other side. Now, lastly, what we really want to see when it comes to all these reversals and continuation patterns is we want them to be preceded by an actionable signal. So if we're looking bullish, we want to see a big hammer, because statistically, price finished up here, it's a lot easier to take at the top side than if price finished out here. Similarly, if we're looking for a downside setup, we want to see it preceded by an actionable shooter. Same concept. Price finish at the lows. If price finished up here, it's a lot harder to go through that. It's a lot easier for price to break through this candle when it already finished at the lows. So what do I mean by that? All of these reversal combinations, this inside bar, if it's bearish, I want it to be a shooter. I want this to be a hammer if it's bullish. 2-2 reversal. I want this 2 to be a shooter if it's going down. I want this 2 to be a hammer if it's going to go up. Same thing, 3-2-2. I want this 2, if it's going to go down, to be a shooter. I want this one to be a hammer. Our favorite 3-1-2 bearish reversal or bullish reversal. I want to see this 1, if it's going to go down, be a shooter. I want to see this 1, if I'm anticipating it to go up, be a hammer. Same thing goes for the run strat. If that goes 2 up and fails, I want it to be a shooter. If it goes 2 down and green and fails, I want this 2 to be a big hammer. It even goes for the continuation setups. Although we don't technically or really take continuations, you still can get a decent move if the inside bar is a hammer. And, the same, even for the 2-2 continuations, you'll see a lot of times it's a lot easier if you have a hammer or shooter going in the direction you're trying to find. So, all of these reversal combinations, all these continuation combinations, they will always work the best and be the highest probability when they are preceded by an actionable hammer or an actionable shooter.